The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks, on the last day before Thanksgiving. And if any of you have a chance today and you really want to do something good for yourself, go to a gospel mission near your home, one of the places where the homeless hang out. And then you'll see, how lucky you really are in life, folks. We've got a wonderful mission here in Tucson. It's actually run by, what's the guy's name? Oh, gosh, I can't. Oh, it's right on the tip of my tongue. I'll think of it in a second. He's a famous movie director. Oh, shucks. Anyway, his brother is the preacher there, and they do a lot of great work. And you'll realize how lucky you are in life, because it's really amazing. I wanted to start the show today about two stocks that are in the news. One is Hewlett-Packard, and the other one is Intel. And I posted both of those into Tiger TV, and we had a beautiful Gartley buy signal in Intel a few weeks ago. The stock rallied about 3%. And immediately, started to go down with a gap below the 786, which was a screaming sign to, there's major problems with this stock. And then I also put the long-term weekly chart of Hewlett-Packard in the room and showed you the fact that it's been going down for many years. It's below the lows of 2006 by a substantial amount, and it looks like it wants to go to about $7 a share. Which will be the 1.618 expansion on the long-term weekly. Now, the reason why I'm bringing this up now is because I am a pure technician. I really don't follow the news. I don't understand the news. I never have. At least when I thought I understood it, I never really did. But I do understand price action, and that's what really counts. I'm going to tell you a little story. When I first moved to Tucson about 20 years ago, I had a physician who became a friend of mine, and he happened to be part of the Portland Cement, Portland Cement family, and they were taken over by Enron. And when Enron went to 95, he was quite ecstatic. They had a great deal of money in the company. But then when Enron got to about 60, he called me and we had lunch, and I told him, I said, what's your break even on this? He said, well, there's really no break even. He said, because I'm in it for nothing, but we've got a substantial amount of our money in this. And I said, well, where would you feel uncomfortable? And he said, well, I'm feeling uncomfortable now. And I said, well, get out. He says, well, I don't want to get out now. So I showed him on the charts. I said, look, at $50 a share, this stock has got real problems because it's corrected more than 50%, and they're telling you one thing and the stock is doing something else. Well, what happened was he never did get out. It went to zero. And, it ended very badly for him and his family. And the only reason I'm saying this is just because people tell you that something's going on in the market, you can't really believe them. You can believe the price, because if prices are going up, there's more buyers. If prices are going down, there's more sellers. That's the bottom line. I'm going to put a chart in for the euro, which is the most actively traded thing in the world. I'm going to put it into Tiger TV. It's the euro for 2012. This was a beautiful chart done by Morgan Stanley and posted into Bloomberg, but it shows all of the major announcements that occurred in the stock of the the euro currency. And I think if you take a look at it, if you look at the beginning of 2012, at the very bottom there, when it was trading around 127, that's when the S&P downgraded the Eurozone countries, and the market promptly rallied from 126 all the way up to 135 with very bearish news. So you have to temper all this stuff with what the prices of these things are doing, because that's what really counts. The news always follows the trend. So, kind of remember that. That's really what we're doing, is we're just looking at price and time, and that's what we're trying to do when we look at these things. Now we have an interesting thing happening now. We're going to go back in history a little bit. Remember last year at this time, guess what? It was Thanksgiving. And if you take a look at the chart that we had last Thanksgiving, you'll see The day after the day after Thanksgiving, the market was basically unchanged. It was setting at a perfect 61% retracement off of the October 4th lows, and from then it rallied, and made a huge move for the whole rest of the year. And so that's where we are now. We are setting over a major 61% retracement that we hit, on last Friday, and this is what we're looking at again. And I'm just saying that history repeats itself. It does have some rhyme, and these are the things that we're trying to look at. Now, I know there's a lot of interest in what I talked about last on Monday's show, and I've only got 2 more shows to do. I've got this show to do on Monday, and then I've got the next Monday's show, and then I have next Wednesday's show, which is the key date. That's the 28th. But I want to repeat this because I think it's worth repeating. This is the best symmetry I've seen in the market in many, many years, and I'm going to start with just a review of what I looked at. And this is from a page from my book, Astro Cycles, and it shows the 1987 move down in March through May, the fact that it was a perfect move down to what happened into August and September of 1987. And in September of 1987, we had a solar eclipse and new moon, and the market rallied up into the full moon and lunar eclipse of October the 7th of 1987, and then gave back 33%. I don't know if this is going to happen again. All I'm saying is the pattern is there's a possibility of this happen. It's all possibilities. It's and probabilities. It's never certainty. That's never going to happen. But when you look at the chart, you'll see the similarities in 1987, that the similarities of the patterns, how they were made, and now that we have these same cycles coming together at the same time, we have to pay attention to it. In my opinion, it's very, very important that we do that, because we're at a spot where there's so much harmony in the markets that we've just not seen it this way before, folks. It's just truly amazing. I'm going to put the Nasdaq into the Tiger TV. They're all the same. I mean, every one of these is exactly the same, but you'll see the equal moves in time and price between April and June and September and November. And then we have the same, the lunar solar eclipse to lunar eclipse coming due on the 28th of November. And my assumption is, and we have 3 assumptions here if this is going to be very tradable. First of all, is that we need the market to be going up into November the 28th, which is the lunar eclipse and full moon. The second thing that we need to do is we cannot take out the lows of last Friday. If we take out the lows of last Friday, this is all for naught. It doesn't mean anything. The third thing that we need to do is after we reach that high on the 28th, the 29th at the latest, the market must start down, and it must start down with a vengeance. In other words, that Friday, the 30th of November, should not be an up day in the market. It should be a down day in the market. If it is a down day in the market and it's down big, I would add to positions. I would, especially if you sold into the what we think is the retracement on the 28th. We've got time to figure this out, but this is how you set up a trade and try to to pick the cherry pick the best thing that you're looking at. Now, this trade that I'm looking at on a scale of 1 to 10, I think is about 11.6 out of a scale of 12. I don't see them like this very much anymore. When we were looking at Apple, when it was at $6.90 a share, we had that big butterfly pattern up there. We had a 3-drive pattern up there. We didn't know where it was going to go, but the calls were extremely expensive, and the puts were very, very cheap. So what you want to do is you want to find a situation where you can find a cheap put to buy the stock market, buy the put, into the 28th of November if everything falls in place, the 3 things that we need to have happen. And if that happens, we've got a shot, and that's all it is a shot. It's a probability of making some pretty serious money. The best part of it is you don't have to risk almost anything. On a risk-reward scale, this is off the charts. This is the kind you give me 100 of these and I'll be happy. I'm happy anyway, but give me 100 of these and I'm really happy. So these are the things that you want to be, paying attention to with these things. Now, the major thing that I look at is the New York Stock Exchange Index, and it has been, incredibly bullish. It only retraced 50% of the move down from June, where everything else retraced either 61 or 78%. So this is telling us that the market is actually stronger than it actually appears. And Basil was referring to that when he was talking about the VIX index and how it's backing off. And I'm watching the VIX index because that'll also help tell us if we're reached a support area where the market, or a resistance area where we think the market is going to react. All I'm saying is these patterns are coming together. I know diddly squat about the news. Never have. Don't care about it. Don't want to know about it. And I've never gotten a tip that works. So why should I start now after all these years? But the main thing to remember is it's just numbers. That's all it is. It's just numbers. These numbers are related to the cycles that we look at. The cycles are related to the numbers of sacred geometry, of which the Fibonacci summation series is part of that sequence, and that's the sequence that we use when we try to pick our support and resistance levels, and that's what we're looking for when we're doing this. When we come into next Wednesday's show, which will be the 28th, what I'm going to do is I'm going to have a strategy, probably several different strategies. Some of the people in the den are really, really smart with options, and they've given me some ideas, to look at. So the amount that we're going to be risking is very, very small, and we'll see if the patterns and things start to work, because this is one of those that not many people are expecting anything like this, but there's a lot of reasons that it could happen. We have a fiscal cliff. We got so many cliffs out there we don't know which one it could be. But we have the derivatives market. The weapons of mass destruction. That could be it. It could be anything. It could be the war with Israel. It could be a nuclear war with Iran. We don't know what's going to happen. But it'll be something dramatic most probably if it does work out this way. And they'll make a mistake for it or something like they'll make excuses for why it happened. All we're looking at is the cycles and what could happen. That's it. It's what could happen. The main thing we don't want to do is we don't want to put too much mental energy into this because of the fact that just drains you. So all I'm waiting for is not get too excited. The market's done what we wanted it to do. It bottomed at 1340. Last Friday we've had a very strong rally on Monday, a little tiny bit of follow through on Tuesday. Today is virtually nothing. The day after Thanksgiving, which is the most positive single day in all of the 255 trading days of the year. There's no day any more positive than the day after Thanksgiving. It makes no difference whether it's bull markets or bear markets. It is the most positive day. Now, last year, the market closed basically down just a tiny, tiny bit. I posted that into the Tiger TV. The next day, on that Monday, the following Thanksgiving, huge gap, and that took the market, all the way up through October of this year. So, it was a major, major bottom. We were looking for a major bottom at that time. We were right at a 61% retracement, and there were all kinds of cycle things occurring at that time. This time it's different. The cycles they're inverted a bit. Okay, we've got to take a break here, and we'll be back in just a few minutes. If you have any questions, 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks, and I put into the Tiger TV the VIX index that Basil always talks about. It's one of his big three that he looks at, the VIX, the bonds, and the stocks. And, we have, the market did not, the VIX index should have really gone way above 22 during this last sell-off in the stock market, and it really didn't. And that tells us that, there's no fear in the stock market, and people are waiting around to buy. And whether this is going to be the case or not, we'll see. But, we might go down and test these lows at 1350. This is, certainly possible, especially if we get something really dramatic happen over the weekend, that they solve the Greek crisis and the fiscal cliff. They put a fence around the cliff and stuff like that. Whatever, it could be anything, and they can make up anything they want. But what we're hoping is, and hoping is a terrible speculation word. You don't want to hope. You want to be sort of observing. That's what the word speculation means to observe. And so we want to observe what happens coming into the 28th of November. But the VIX index was telling us even last week when it couldn't go any lower that there was some type of a pretty big bottom. And we came out of this bottom really powerful, folks. We had a big move out of there. 40 points in the S&P is nothing to be sneezed at, nor is 300 points in the Dow. So, something is there. There was some buying coming in, but we are, facing this cycle that's coming up on the 28th. We'll see if it's going to, work that way. But I'm a little concerned about, some things, and that is the fact that some of these major stocks like Hewlett-Packard and Intel especially, folks, because, Intel makes the chips for all of these phones and computers and stuff like that. They must have some really internal problems Otherwise the stock wouldn't be, breaking down badly. And of course, they're giving us reassurances, that, everything is okay. They say, well, we might have a bad quarter or two, but, they're giving you the same line of baloney that Enron did. I was following the Enron news, and the main reason was because Doc was my good friend. And, every day that one of these Skilling or one of these other guys would come out, I can't remember all their names, but Flash Flood or something like Fastow was one of the ones that was always coming out, and they were saying, oh, everything is fine. Well, it was fine at 90, and it was fine at 80. It was fine at 70 and 60 and 50 and 40 and 30, all the way down to zero. Then it's, now we've got a problem. And so you got to look at the price. And if you're in something that you're stuck in, ask yourself, the question is, how much more heat can I take? That's what you have to do. You've got to do that. That's the main thing that you have to realize, that this is part of what we do in a area of speculation. So this is what we're watching. Now I want to get off into the foreign currencies a little bit here, because the rest of the world will be closed tomorrow. That will be closed tomorrow, but the rest of the world will be open. Europe will be open, and the Asia will be open and stuff like that. But the main thing that I'm really, really paying attention to, which we have been for a long time, we've been really bullish this, and that is the U.S. dollar, versus the Japanese yen. And, we are really had a tremendous move in this thing over the past couple of weeks. It's really, telling us that it wants to go a lot higher. And once we can get the Japanese yen above 84, we can certainly take the Japanese yen to a level, that would really, scare a lot of people, because people don't remember this, but the yen used to trade at some, ridiculous number like, I think 277 is where the yen used to be, going back about 20 years ago. So 277 was the high in this thing. So you could certainly see where you could have a tremendous move in the yen. It could move 50% from here, and it wouldn't even make a 61% retracement of the high from 2001. So if you get a chance to buy the yen again on any pullback, you want to be watching that, because it's starting to act very, very strong versus the dollar. The dollar is acting very strong versus the yen. I don't understand the fundamentals behind it. All I'm saying is that this is what's happening, and it looks pretty interesting, where we are. We're coming up to a pretty good area of resistance right here at the 82 level, 82.50, but, it's going to have some pretty good moves in it before, the rest of the time. Now, someone asked a question about the S&P on, what I think is, where it's going to go and, things like that. I don't know exactly where it's going to go, but no one else does either. But we'll take a break, and then I'll give you my synopsis of where I think we're going to be looking at. We'll look at Apple too. 877-927-6648.
Heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted into Tiger TV the E-mini S&P since it made its high way back in September, and you'll see that, it's had, four rallies, and this last one has been the strongest. It's been stronger than any of the other three rallies, so that tells us that, this bottom that we had at the 618 was pretty powerful. We've got a call coming in from New Jersey. Dan, are you there?
Yes, sir, I am.
What can I do for you, my friend?
Well, you already just signed up for your newsletter today, and I'm part of the Larry Pesavento fan club. I want to let you know that.
Well, I knew there was somebody out there. I'm glad I finally found out who it was. What can I do for you?
Yeah, I usually trade small caps and IWM, and that's primarily what I do. I'm kind of lucky and went from short to long a couple days ago and up like 10% in the TNA. But I wanted to see where you think I should flip back over on IWM on the short side. If it gets up like 81.50, does that look like a point where you'd see it turning?
Yeah. Well, I would think so, but if you want the exact time, it's at 10:35 a.m. on November the 28th. I don't know what, just watch November 28th. It should not go below the low we made last Friday. We could have a correction here because we're up 3-4 days really good. We're coming into a real positive day after the after Thanksgiving, but even that might mean much. But the main thing is the 28th. That's what we have to watch. The ideal situation for you and also for us that want to try to get short then would be a really good move straight up, just 8 or 9 days straight up into the the lunar eclipse on the 28th. But you're in that, you shouldn't take a loss now. I would, certainly protect some of your profits.
All right. And then I got to tell you, I remember last year. Last year was like, it was right at Thanksgiving. It basically went up Thanksgiving to the rest of the year. It
sure did. I remember that day very, very vividly. It was really quite spectacular because of the fact that, the market was had a pretty wild action that day. It was up and down, and it ended up being down just a little bit. But, boy, what happened after that was, the next day when it gapped up, boy, it was a big astro date that day, too. So it was really quite exciting.
Very good. Well, I appreciate it, sir.
All right, pay attention on the 28th. That's what you want to watch. Yep. That's the key date.
Thank you very much.
Okay, my friend. Okay, we got a call from our friend John in Philadelphia. Are you there, John?
Hello, Larry.
How's the weather report? Is my grandson going to be warm today, or is he going to be cold?
Yeah, well, I can tell you a warm front is blowing in from the west, so I would say yes.
Oh, good. I'm glad to hear that. Well, what can I do for you, my friend?
Larry, I wanted to ask you about corn. If you might pull up from your system the daily chart.
I just posted it into Tiger TV.
Corn had made a low in September, came back and retested here in November with a 710, actually double bottom here. It's real interesting. So we bounced off that level.
That was a 382. Yeah.
Exactly. And here's my question. Now that has been done, do you have a suspicion as to if this continues to rally, where it might go? That's my question.
Yes, it's very easy because if that is a major low, and it certainly could be, because you went from a low way back in May at $5, you went up to $8.50, then you backed off, $1.50, and if it moves, and we have any more bad weather, you could be looking at $9 or $10 corn. The key is, John, it's got to clear above $8 a bushel. Once it clears $8 a bushel, that's telling you that your trend is probably starting to turn up, because what we've had recently is a series of lower highs.
Yes.
And as long as we have these lower highs, it's not going to go anywhere. And if we can, the first one would actually be 770 a bushel, but 780 is the one that I'm watching. And I've been trying to trade it from the long side because it has such beautiful ABCD patterns forming in it, all the time. We had a beautiful one down at 7. In fact, you were the one that were bringing it up in the Tiger TV, and the Tiger's down around 710, I believe, per bushel just a week or so ago, and that held like a rock, and has rallied more than a couple $1,000s a contract. So it's still up because you have that support at the 382. But 780 is what I'm looking at per bushel in corn. If we clear that, then we've got a lot of higher bottoms, and we're going to be like what we did in gold when we had those higher bottoms in gold down at that 1560, 1570, 1580 level. It's just massive support kept coming in, and that's why it was so interesting.
I'll share a fundamental driver that could emerge here in the next 60 days. Could emerge tomorrow, and within that window, of course, it might not, but here it is. The U.S. crop obviously is way down this year because of the drought problem, the drought losses. An element that has been seen the past 60 days is there has been virtually no export business. In other words, the smaller U.S. crop, U.S. Exporters are not selling it to Mexico, Japan, North Africa, that sort of thing. All the export business has been going to the Russians and to some of the Europeans. But the corn prices over there, Larry, are up $1 a bushel just in the past 20 days. And there's talk that export supplies there are running out, and that export business will come back here, possibly driving prices higher. So that's just a heads up for you.
Well, thanks. It's important because, we live in a global economy now, and you need to know what prices are, in other countries because, many people don't get to export like we do. And, what they have to charge for. So it's very important to watch that.
Thanks for your ideas, Larry.
By the way, John, I wanted to thank you personally for everybody at TFNN for the stuff that you put into the Tiger Den. I watch that every day, by the way, and you do more posting than most people, but the stuff that you post is really fantastic. I mean, you've done a great job, to understanding the markets and show, how you buy things, and you tell people where you're putting your stop, and you tell them where you're wrong, you tell them where you're right, and there's very few people that walk that talk, my friend, so keep up the good work.
Just trying to help. Have a nice day.
As my grandpa would say, Buford Prusser would be very proud of you.
There we go.
All right, my friend. Listen, happy Thanksgiving to you and your family, too, John.
You as well.
Okay. Okay, folks, we want to talk here about the Treasury bonds because this is another, key part of what we're looking at when we're looking at this whole puzzle. And, we've had some major resistance come in at that 153 level. We had a giant ABCD over the September, October, November period form up there that was almost a perfect double top. And now we're in the fourth day of a correction to see if, where the correction is going to come. And if we have rising bottoms in bonds, like there's a potential because, we've been seeing that, that support would come in around the 147 level, which is about 3 points from, where we are now. So that would fit in with the scenario that the market could be, stronger coming into this 28th of November, and we'll see if that works. Now, if the market is not coming up into the 28th of November, there still might be a trading opportunity. But the ideal scenario is to do exactly what it did 25 years ago, because these things do repeat, folks. If you don't believe that, you're not studying the markets enough, because this repetition that we have is just truly amazing of how many times it repeats. It might do it a little bit differently, but it's close enough that you can actually make a prediction of, where things are going to be at that particular time. And, I haven't been, preaching, I'm not a perennial bear, like some people are, but this particular situation that we have has got a pretty good probability of happening if we're coming up into the 28th. But we need, like I mentioned before, we need three things to happen. A, the bottom that we made on Friday, that has to hold. We need to be going up into the 28th of November, which is the lunar eclipse and the a full moon. And then right after that, on the 29th and 30th, we need to turn down. We need to turn down by Friday at the very latest. Because if we're up really strong on Friday, that's going to say that the lunar cycle is going to be off by more than 3 days, which is really, really skeptical. But if it's doing that, if it comes down on 29th and 30th, that's fine. Now, it doesn't make any difference if it comes down really hard. That's telling us that we're going to be right. Like if we come down very, very fast and we begin to challenge the lows from, November the 17th. I think the low was the 16th. But if we start challenging those lows by Wednesday or Thursday of next week, the 29th or 30th, let me tell you something, boys and girls. The fat lady's going to sing, and it ain't going to be at the Bulls Ball. It is going to be something really, really nasty, because that would mean the scenario that we talked about is going to be, really, really close to fulfilling. And this is what we're trying to do. I would be very aggressive if the market is up on the 28th and then starts down on the 29th and 30th, and you were able to get your position on the 28th and you have some profits, and the market closed really badly on the 29th of November, then I would be very aggressive. Your risk would be that the market would reverse and gap up on the 1st of December, but frankly, the odds of that would be very slim if the market closed badly. Fortunately, we're going to be on the show. We'll be on the air on the 28th. We'll get a better idea of whether this whole scenario is going to, unfold the way that we think it's going to do. But, right now it's looking as though at least it started in the right direction. That's about the only thing you can say. That the first part of it seems to be all right. The cycle part seems to be pretty good. And, nothing other than that, you don't have anything else to really go by, to really do anything. Now, we talked a little bit about the Japanese yen. I also wanted to talk about the U.S. dollar because, we completed a big ABCD Gartley sell pattern last week at the 50% level up at that 181.55 level. We've come down about a half a point, which isn't too much. But the thing to remember here is the euro is 53% of the value of the U.S. dollar index. but the dollar versus the yen is really starting to, gain interest. In other words, more and more people are starting to look at buying the dollar against the yen. And that old high in the yen back in 1983 was at 286. So you went from 286 down to 72. So you can imagine what a 382 retracement would be if that in fact did occur. So the dollar is what makes this move. If we come down into that 79.80 to 80 level in the dollar index in the next few days, that's going to be 3 higher bottoms, and they'd be right at the 50% retracement of the low we made in September, and that would be a place where you probably want to be looking, to be short the euro from. Now I get lots of questions about our favorite stock, and that is I don't know if it's a favorite stock, is Apple, and where we think Apple is going to go. And we talked a little bit about this on the show that we had on Monday, and I'm just going to put it into Tiger TV and show you what the possibilities are for Apple, because we had the low that came in on last week at the 507 level was exactly 50% coming off the low from July of 2011. So this was a major low that occurred at that point. It was also 61% of the low from November of last year. So both of those were very, very powerful numbers that made the market hold almost exactly where it was supposed to go. Now what you want to do is you want to see how the market should rally. Well, we came out of the low with a very, very strong day, with Apple up about 30 points, and then yesterday and today it's been relatively quiet, but it's still not down very much. But it gives us a price objective of 629, and the 629 comes in from the high we made at 703 down to the low we made at 506 and change. The 61% of that, you take $200 a share times 0.618. That'll give you, roughly 120. You add 120, to 505, and that's going to get you to 629 a share. That's what we could be rallying to in Apple. Ideally, that would be coming in. I'm not going to be trading Apple. I'm going to be focusing on the stock indices because, Apple is it's in a whole area all by itself. But that was a great buying opportunity down there. We were looking at the 540 calls as on its way down, and went a little bit below that, but now they've started to work. But it would be very easy if the market can, if Apple can drop $200 a share in 6 weeks. It can rally $150 a share in 2 or 3 weeks. So that's not unusual for a stock that's that big. So this is what we want to watch. If you're in the stock of Apple and you did buy the calls that we recommended in the newsletter 2 weeks ago, then those they should be home free now because they were 540 calls, and you don't want those to go to a loss. So if the stock goes below 540, I would say just stand aside because you don't want to take a loss in a position, after it starts to, to really start to move. Okay, we got to take a little break. We'll come back and wrap up the show. I've got to stuff a turkey, and we'll be back in just a few minutes. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks. I want to remind everyone that the day after Thanksgiving is the most positive day in stock market history, going back to the early 1800s, 1792, I think, is when they first did the first trade under the buttonwood tree at the corner of Wall and Broad. And so about 78% of the time, the day after Thanksgiving is a positive day. I don't know if it has anything to do with Black Friday. I've never been to a Black Friday sale. In fact, I don't do much shopping anyway. But, it's from when I look at the ads, I guess it must be a real madhouse. But anyway, this is what we're looking for as the market is moving up. There's going to be some resistance in the S&P, I believe, around the 1396 level. That's a 61% retracement. But frankly, if it makes the 61% retracement that quickly, coming off that bottom of the 16th, it most probably will be headed up into the little bit higher level into the 28th of November. The 28th of November is the big day. We have a show on Monday, which will review these things again. We'll have a little bit more information. And then on the 28th is the day when we really want to be, putting our ducks in order. And I'll try to have a couple of strategies. I'll do, maybe a put strategy for an OEX or something like that, and or maybe one of the ETFs where it won't be too much of a risk. And if it's right, it will make a lot of money. If it's wrong, it will lose very little. But the good thing is you don't have to wait around to see if it's going to work or not. Because if it's not working by December, when we come in here on December the 3rd, which will be the first trading day in December, then this thing ain't going to work. That's the bottom line. So we don't have to wait very long. We don't have to risk very much. Those are ideal situations for trading. We won't know what the outcome, but frankly, no one else does either, and that's the beauty of trading. So that's the bottom line. I want to end the show because we're coming up here. I guess there's no other questions, but I want to say again to everyone is to try to help somebody out there, either within your family or someone you see on the street, that seems to need help. And I always try to give people, money that are, asking for money as long as they're not smoking or drinking. I don't want to, support their bad habits. I have to support my own bad habits, but try to give somebody something that more than what you have, because we got a lot of stuff, folks. I mean, the Lord's been pretty good to us, so try to remember the folks that are certainly less fortunate, and especially the veterans, the wounded warriors, and people like that have to go through some really tough times, and it really makes it really, really difficult to go through the holidays and stuff. And frankly, this is I'm not much into the holidays, but I do like the part about the giving. Anyway, this is it. Live every day in an attitude of gratitude, and may God bless.